Welcome to TradeVestor Hub. Today, we're mastering candlestick patterns, powerful tools that can transform your trading. Let's get started. Candlestick charts are powerful tools that show market trends using single price bars, capturing the battle between buyers and sellers. A green candle means buyers won, while a red candle shows sellers dominated. These patterns help traders predict price direction and make smarter decisions. Used for centuries, candlestick patterns are best on daily charts and work even better when combined with other indicators. Want to master candlestick patterns? Let's dive in. A candlestick shows a market's opening, high, low, and closing prices. If the body is green, the price went up. If it's red, the price went down. The lines above and below are wicks, showing the day's highest and lowest points. By analyzing these parts, traders can spot potential market direction changes. Doji and spinning top candles show market indecision, where buyers and sellers are evenly matched. In a doji, the open and close are almost identical, while a spinning top has a small body. These patterns warn that a big price move could be coming soon. Bullish and bearish engulfing lines signal trend reversals. In a bearish engulfing line, a red candle fully engulfs the previous green candle after an uptrend, showing sellers taking control. In a bullish engulfing line, a green candle engulfs a red one after a downtrend, signaling buyer dominance. These patterns suggest a possible change in market direction. Hammer pattern. A hammer appears at the end of a downtrend, showing that sellers pushed the price down, but buyers fought back, erasing most losses. The long lower wick signals strong buying pressure. If the next candle is bullish, it confirms a possible trend reversal. Hanging man. Hanging man appears at the end of an uptrend, showing that sellers tried to push the price down, but buyers regained control. The long lower wick signals selling pressure. If the next candle is bearish, it confirms a possible trend reversal downward. Abandoned baby top bottom. An abandoned baby is a powerful reversal pattern. It appears as a small, isolated candle that gaps away from the previous trend. An abandoned baby top shows up after an uptrend, signaling a bearish reversal, while an abandoned baby bottom appears after a downtrend, indicating a bullish reversal. Confirmation comes if the next candle moves strongly in the opposite direction. Take special note of long tails and small bodies. Small bodies on candlesticks show market indecision, where buyers and sellers are evenly matched. This often signals a potential trend reversal. Long tails reveal failed attempts to push the price in one direction, hinting at a shift in market sentiment. Together, they suggest a change may be coming, so watch closely for the next move. Want to master candlestick patterns and level up your trading? Subscribe to TradeVestor Hub for expert tips and strategies. Like, comment your favorite pattern, and share this video.